Welcome to the Transparent FX Academy. I'm Nick and I'm a top author and trainee with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have quite strong structure, which the market has just tested and is currently rejecting to the upside. In fact, this level was acting as previous monthly support here, again here. Again here, we can see how every single time that the market tested this zone, it got a rejection or reaction to the zone. We can see also here how even though we didn't have a long-term move to the upside, we still had the creation of this green candle showing how the market respects this level. And the last time that the market tested it was here, with the retest after the break back above the zone as support, and the market started rejecting it to the upside. Now, at the moment, what we can notice is that we are currently on our way towards a potential test again of this support and demand area, meaning that we could expect short-term bearish price action for a retest of the zone before then getting more bullish continuation. Dropping down on the weekly time frame, what do we have? From a weekly perspective, we must notice how the market has just broken back below structure. In fact, this area was acting as previous resistance. The market then broke it to the upside with this candle. At that point, the area started acting as support. However, we now just got the break back below the area, which makes it resistance at this zone here. So what we could expect here is a retest of this previous weekly support and resistance before then getting a potential rejection to the downside away from this zone. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, things are looking quite interesting. Now, I did speak about EURUSD quite a few times in the past. I spoke about it after this impulse and correction. From here, I explained all the reasons for which we could expect this rejection to the upside. Again, after this impulse and correction, from here, I explained why we could expect the creation of a potential higher high. And then after the creation of this M pattern, explained why we could expect the potential completion of the neckline at the completion of the pattern at the neckline, which is in fact exactly what the market created here. And by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. However, at the moment, what we must notice is that we just had the creation of a very strong impulse to the downside. Now, in general, after an impulse, what you could expect is first a correction and then more bearish continuation for the completion of the impulse correction and impulse pattern to the downside. We must notice how the structure here on the daily time frame is exactly here, with this level being exactly the previous daily support, which was acting as support here and support here, which now that the market has broken into the downside is turned resistance. We can also notice that since we have an impulse, if we want to measure the correction, what we have to do is take our Fibonacci from the high to the low of the impulse leg. And if we do that, we can see how we have a perfect 0.618 Fibonacci retracement lining up perfectly with this previous support turned resistance, creating a confluence of resistance at this area, which we could in fact expect the market to go and test before then getting rejected to the downside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, so hedge funds and the big players in the market, and we look at the data precisely for the euro, the first thing that we have to keep in mind is that if we're checking the data for the euro, we are actually already checking EURUSD. because all currencies on this spot are traded against the USD. And if we look closer here, we can see how with all the last reports, we were only seeing institutions closing shorts. First 1.1k shorts closed here, then 2.8k shorts getting closed, then 3.8k shorts getting closed here, 700. However, with the very last report, we see 7,500 shorts getting added. So even though we still see longs added, this is the first time that a lot of institutions have once again gained interest in shorting the euro. So even though in the long term net positions are getting increased, everything is looking very bullish, in the short term, it seems like there is room for more bearish continuation as institutions are shorting. So what we were looking for at the beginning of the video by looking at the monthly time frame, so a short-term bearish price action for the retest of that monthly demand and support, and then more bullish continuation seems to be lining up perfectly with what we see here by looking at the commitment of traders. So what we could expect at this point is that we would have good probabilities for more bearish continuation if the market would go and retest the confluence of resistance that we have previously identified at this level. There is definitely a good probability that if the market will go and retest this level, from here we could have a potential reversal lower with institutions adding more shorts into this zone. So if we get a retest of this area, how we could be approaching this potential move lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the potential completion of this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that there is a special promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to only $97, one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them after you join the mentorship program directly from your student dashboard, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and the price goes back to normal. And directly from here, there is the button to join in order to get automatically access with the email and password that you will create during the checkout process. So I really suggest that you take advantage of this directly from here. The link of the website is also in the description, and looking forward to have you on board. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.